Hey, what's up everyone? I'm going to be showing you guys today on why Solana could continue to pump to the upside, possibly over the course of the next few months or possibly even weeks, and why we shouldn't be scared until major invalidation levels break. We'll be taking a deeper dive into the Fibonacci and Elliott wave counts to get an idea of where these wave structures can end from a timing perspective, but we do have one possible alternative scenario that can bring us down into extreme bearish territory that will be the end of the bull market entirely, and that currently is a lower probability until proven otherwise, but nevertheless, I still do have that scenario that I'll be sharing. Now, when you have 5 waves up and 3 waves down within the Elliott wave theory, depending on which degree you're in, we should be getting another 5-wave resolution to the upside to complete one larger time frame degree of an impulse wave, which we are currently possibly observing. So we do have the possible 5-wave, and we are possibly in that wave 4 right now. And again, waves 1, 3, and 5 are the ones that are going to be constructed as 5-wave moves. So right now, we're currently in that corrective phase for that wave 4 and possibly building up what could be another larger move to the upside into that $400 to the $600 range, depending on how that wave 5 is going to be constructed. Now, we have to discuss the potential Elliott wave patterns associated with the wave 4, and currently we are building what could be a possible triangle as indicated by this yellow that will be bringing us into Chop City for quite a bit going into the fall of this year, or possibly ripping the band-aid off for this wave 4 to be completed even sooner, and we meet that parallel channel even quicker. Now, another evidence that we have on the table or the macro is the potential of a parallel channel support that many are currently eyeing, even if you're not versed in Elliott wave theory. And the Elliott wave theory also makes use of this that helps us identify the price targets for a wave 4 and realize how future trends could develop based on that trend line being created. So these Elliott channels are most useful in identifying targets for wave 4s and wave 5s, which we may be currently in, so there's no perfect time to do it than now. The initial channeling technique for an impulse requires at least 3 reference points. I've discussed this in my prior videos months back, but to quickly refresh, when wave 3 ends and what we currently are looking like it is completed, you also want to draw a parallel channel touching the wave 2 termination point. So this, of course, that our wave 3 has assumed been complete, and at this current time of recording, it's pretty safe to assume that it's been established. This construction provides an estimated boundary for this wave 4. Then, in most cases, of course, third waves travel far enough from that the starting point is excluded from the final channel's touch points as well. So if the 4th wave ends at a point not touching the parallel channel, we have to consider readjusting, but right now it's a pretty high probability that we will eventually retouch that channel. And then you connect the waves or ends of the waves 2 and 4 once it's established. As we can see here, this waves 2 and 4 are going to be assumed as the reference point, and then we can see this possible wave 5 as a target zone at the upper boundary of the channel, which could range us anywhere from the $400 to the $600 or even $800 regions, depending on how far it goes. So right now, as I've discussed, we're currently in that wave 4 degree. We have 2 possible scenarios being built here. We have a possible 3-way move going into wave W, X that is now complete, and we're looking for another 3-way move down for this wave Y. Now again, WXYs are constructed in 3s. That's known as the double zigzag. You have 3, 3, 3 being built here, and that constructs that larger wave 4 for this possible wave 4 being completed around that lower boundary of that parallel channel. Or we could be possibly creating another triangle, which means that we're going to be even further range bound, where we're now creating series of 3s where we're going to be creating this subwave D and wave E. Now, triangles are a bit difficult to kind of construct because they are so rare in nature, although they are usually the perfect look for wave 4s. However, we want to be waiting until the subwave D is completed, and if we do, then we should be ideally getting a rejection somewhere around these levels here, again around the major Fibonacci levels. And if you're looking for the wave Fibonacci level of the previous subwave that we've created for this wave B or C, we're going to be looking for this to be ending around the 620 of the previous degree. So if we're looking at it from here, we can see it possibly ending around the 620 of this previous subwave that has been created. So that wave D should end around 168, 170 regions of there to create that next kind of trend line that's going to be creating that contracting look for that triangle. Then we should be ideally looking for another wave E before we break out of here. Nevertheless, it doesn't really matter because this wave 4 is what we're ideally going to be looking for. It's just a matter of when when that we're going to be going up for that wave 5. So we're just looking for that 3-way move down, and that wave 4 is going to be completing, and we're going to be looking for that resolution of that 5-way move. Depending on the targets, we'll be updating the target points above these regions here, most likely ending around these regions here, utilizing that parallel channel. Now that is the first kind of overall structure that we're looking for. Then we should be looking for a major pullback regardless, even if you're a bull or a bear, because that completion of a wave 1, we're looking for a 3-way move pullback. As I've mentioned, 5 waves up, we're looking for a reactionary corrective phase that's going to be established as another 3-way move of a larger degree. So that's what we're going to be looking for. So either way, we're still looking for more upside potential. There's still gas left in the tank. I still believe that we shouldn't be too worried until major invalidation levels break. The biggest one is going to be this parallel channel, and even then we still have invalidations of this possible wave 4 all the way down until wave 1 has been breached. So depending on how it works, we do have another alternative scenario where we can start looking for alternatives, because if it starts breaching these levels, although it is valid for a wave 4 to reach all the way down until it breaches wave 1, we do have possibilities of looking into a possible larger corrective move that could be utilized as a possible larger A, B, C, and instead of this being this all as a 5-way move, we have to label this alternatively as a 3-way move, where we're looking for another idealized zigzag. So as I've mentioned, again, we were looking for 5 waves up. Instead, in this case, we're looking to be working in a larger degree move of a wave 1, 2 to the downside as a 3-way fashion, and that's what we're going to be looking for. And we're looking for this last partner, like for this wave C, and wave C's are actionary waves. So actionary waves are going to be constructed as 5-way moves. Now, it's still very early within the stage to be considering even if this is going to be happening. Again, we always, at least at the very minimum, be looking for that first actionary wave within this wave C to be completing as a wave 1, and then looking for a wave 2, and then we can start talking about whether this corrective move is going to be is looking likely as the rejection zone over here, depending on what Fibonacci level is being created. Once the actionary wave is created, we'll then be looking for that wave 3 to the downside for a possible short opportunity. So this right now, if this is the case, we're still looking for again a 5-3-5. Again, wave A's are created as 5-way moves, and wave B's are created as 3-way moves, and wave C's are created as 5-way moves. So for those that are new to the Elliott theory, this is how this whole move is going to be created, as a 5-3-5 move. And again, as the previous scenario has shown, we have seen this as a 3-way move, but rather now this is constructed as a 5-way move because we're looking at the first leg being created as wave A. So wave A, B, C, that's a 3-way move that's going into wave B. There's nothing wrong with this, although our C wave is quite extended. We're now looking for a possible 5-way move into a wave C that's going to be bringing us possibly even breaking this previous low all the way down into that $6 to the $7 range, possibly into the $4 to $5 range if you're a bear. So those are the current two scenarios. I'm still currently leaning towards that we're lurking in a larger impulse move to the upside to complete at least one larger degree, that this wave 5 is going to be creating a larger primary degree because this is a cycle degree. That's the only data that we have currently with the data given. But again, we are going to be taking profits no matter what as a bull or a bear, that we should be looking for a larger corrective move once we do reach the $400 to $600 to $700 regions. So hopefully that was helpful, ladies and gentlemen. I'm going to be updating this as time moves on, seeing how this wave 4 develops. I did give my two ideas, or two kind of forward outcome ideas on which possible corrective wave 4 pattern we could be creating. It's either as a WXY or as a possible triangle as indicated by this yellow. So hopefully that was helpful, ladies and gentlemen. If you're not already in my Discord membership, please do not hesitate to reach out to me. The X4 Discord membership link is in the description below. If you're already not following me on social media at X, formerly known as Twitter, at X4 Global, please do give me a follow there as well, because I do a lot of my updates on there as well. Thank you very much. I'll see you guys in the next video. Bye-bye.